Yeah, and Dave, that's illustrated. All you have to do is look at a chart of gold, and it goes to 24 hours after those Russian reserves were confiscated, or whatever word you want to use. Once Russia was stripped of those assets, those treasuries, the following day, gold started moving higher. So I think we were what, 2100, between 2000 and 2200, something like that. May have been even lower. I would have to go back and look at a chart. But from that day forward, the chart of gold is the same chart as a bulldozer in first gear. It just relentlessly has gone higher and higher. And the reason being, as you said, other nations, obviously not just Russia, but the rest of the world looked at it and said, hey, if they can do it to Russia, they certainly can do it to us.
Despite the U.S. dollar's gain, gold prices held steady early Wednesday. Foreign investors have historically found gold less desirable due to currency appreciation. But Washington's uncertainty has balanced it. Bill Holter says precious metals are a key hedge when faith in institutions erodes, and recent events reinforce that role. Trump's decision to fire Fed Governor Lisa Cook over mortgage fraud claims has shook the markets. This challenge to the Fed's independence raises fears that political interference could distort monetary policy at a time when investors want clarity on future interest rate decisions. Gold remains a safe refuge despite the higher currency, especially since investors expect the Federal Reserve to slash rates aggressively. December gold futures rose 0.5% to 3,033 per ounce on Tuesday. Price increases have continued in recent weeks. After a summer dip, bullion is up over 30% this year, its best year since 2010. This resiliency reinforces gold's credibility during policy turbulence, especially when monetary authorities are caught between political pressure and economic reality, Holter says. The Federal Reserve says long governor tenures and removal protections protect monetary policy. This highlights Trump's unexpected and controversial stance against Cook. Investors expect the Federal Reserve's favored inflation gauge, unemployment claims, and U.S. GDP numbers. More than 88% of market players expect Powell and the Fed to lower rates next month, despite trade and tariff inflation fears. Holter warns that the daisy chain of political, debt, and central banking breakdown may increase gold demand as a store of value. He believes the fight over the Federal Reserve's independence and policy orientation is about retaining faith in a stressed system, not only rate reductions. He believes that when confidence declines, gold will become a stabilizing asset in a chaotic financial climate. Bill Holter's interview excerpts follow. To receive timely updates before our discussion, subscribe to our channel and activate the chime symbol. Hope you enjoy the video, and thanks for helping.
In 1944, Bretton Woods, another reset in 1971 when we went off the gold standard. I guess, and this is the way, when I talk to people regarding the current situation, my first question is the U.S. government bankrupt? Are they broke? And 95% of the people will say, well, of course they are, but it doesn't matter. And then my next question would be, who is the issuer of the world's reserve currency? It's the same entity. Mm-hmm. So you have a financial world that's running on top of a foundation of paper treasuries that are issued by a bankrupt entity. So the absolute need for a financial reset is in place, and there would be no BRICS if that was not the case. Mm-hmm. So the world is, more than half the world now has begun the process of moving away from dollars, moving away from U.S. treasuries as the foundation for the world's financial system. There's your reset right there. The world is resetting away from the United States.
And Bill, that was put into much quicker motion when during the Biden administration they weaponized the dollar even greater when they, politically correct term, confiscated Russia's $300 billion of foreign assets,
Right,
which not just made Russia go, we don't want to play in the sandbox anymore, but many dozens of other countries said, wait a minute, if they're doing this to Russia because, well, and they got nukes, and just because they disagree with them on an issue, what are they going to do to us that we don't have nukes, right?
right. Yeah, and Dave, that's illustrated. All you have to do is look at a chart of gold,
Mm-hmm.
and it goes to 24 hours after those Russian reserves were confiscated, or whatever word you want to use. Once Russia was stripped of those assets, those treasuries, the following day, gold started moving higher. So I think we were what, 2100, between 2000 and 2200, something like that. May have been even lower. I would have to go back and look at a chart. But from that day forward, the chart of gold is the same chart as a bulldozer in first gear. It just relentlessly has gone higher and higher. And the reason being, as you said, other nations, obviously not just Russia, but the rest of the world looked at it and said, hey, if they can do it to Russia, they certainly can do it to us. And that was the world protecting itself, moving reserves out of treasuries and into gold.
And Bill, in the intro, I mentioned this facade falling down about what we're being told by government officials and what's in fact reality. Bill, you and I have done many interviews together, and there was a particular interview we did, must be about a year and a half, 2 years ago. And at the time, there were many fewer believers in the fact about the reset and the like.
Right,
But there was something you said that I keep hearing about from people contacting me. And they said, I really doubted this whole thing about the reset. And I really was buying into, oh, the stock market's going up. Their employment numbers seem to be good. And you had mentioned, why don't you just take a drive down Main Street, wherever you live,
right.
right? And you're going to see storefronts that are empty, storefronts that are boarded up. And it's interesting because over the time period now, months, I constantly hear from folks saying, Bill Holter said, take that drive. And I've done that drive hundreds of times, thousands of times. But the first drive I took after I heard Bill Holter talk about that, I saw something. I saw I saw our town was actually not like they're speaking about
Right.
on TV or the statistics that keep. And Bill, that one statement you made opened a lot of people's eyes. Well, there was something else now that opened a lot of people's eyes, and that is that all of a sudden, you've been talking about, a number of us have been talking about the bogus employment data or any government
Right.
data, right? Well, we saw this last week where these huge revisions were once again coming in. And if people had been paying attention, there have been hundreds and hundreds of thousands, millions of, if you will, data points revised as far as employment.
Right.
Bill, this is the crumbling, the disintegration of that Berlin Wall of financial mope. Am I off?
No, that's exactly right. And Jim termed it management of perspective economics. And basically, what he was talking about was the numbers that we get from BLS are completely bogus, whether it be the inflation numbers, the growth numbers, the unemployment numbers. The numbers were bogus. And I guess if you think about it, the danger of telling a lie is that then you have to tell another lie.
Right.
And you have to tell, and each lie that you have to tell going forward to cover past lies has got to become bigger and bigger. And now we're to the point where people can see with their own eyes that things are not as
Analysts have expressed concern that the global financial system is approaching a critical juncture, and they are closely monitoring recent developments in U.S. monetary policy and debt management. The Federal Reserve is under increasing pressure due to the continued decline in foreign appetite for U.S. treasuries and the expansion of deficits, which has raised concerns about the long-term stability of the bond market. The dollar's ability to sustain its central role without further eroding confidence is becoming increasingly uncertain, as inflation has proven to be more persistent than anticipated, and government borrowing has reached record levels. These genotypes are not isolated. They are indicative of a more profound vulnerability in a system that is based on leverage, where even minor fluctuations in sentiment or liquidity can have a significant impact on global markets. Bill Holter underscores that this fragility has resulted in a daisy chain of collapse, in which debt obligations and credit structures are so interconnected that the failure of a single link could swiftly destabilize the entire framework. In his opinion, central banks are no longer in control of outcomes. Rather, they are responding to events that reveal the limitations of monetary intervention. In light of this, the recent decision by the United States government to designate silver as a critical mineral has significant implications. This highlights Halter's potential as a financial refuge during periods of uncertainty, in addition to its increasing industrial relevance. He emphasizes that precious metals are indispensable during periods when trust in paper assets is at an all-time low, as they cannot be manufactured at will, in contrast to fiat currencies.
As they're being portrayed by the administration or by mainstream media. And one other thing that Jim had talked about was GOTS, get out of the system. And that functionally is the most important thought process of all. You've got to get your assets out of the system. You and I have talked about it. I've talked on many interviews. I've put articles up. I've written articles. And of course, David Rogers Webb is the guy who wrote and put together The Great Taking. And I've posted that on my website probably half dozen times at least. And I assure you that what the man has written, what he's spoken about, is absolutely 100% spot on. All of those laws are on the books all over the world. And they started doing that in 2014. What they're getting ready for is pulling the rug out from underneath the market, out from underneath the economy. And when you have brokers, banks, and insurance companies failing, the assets that you believe are your assets you are a named beneficiary. It's for your benefit. However, the actual owner, when push comes to shove, is your broker, is your bank, is your insurance company. And when they get blown up, when derivatives collapse, you will lose everything. So while MOPE was a great call by Jim, the best call was GOTS, get out of the system.
And unfortunately, Bill, a lot of folks haven't gotten out of the system.
No.
A lot of folks, even though you've done everything but hand them a gold coin or hand them a silver coin, a lot of folks haven't taken the basic necessary steps financially to go to the best store of value historically over 5,000 plus. Correct?
Over 5,000 years, and you could look at just the last 25 years. What has been the best asset to have owned in this century? It's gold. Gold has outperformed everything.
So, Bill, you're a visionary on many fronts, right? So here we are right here and now with the reset as it is. Many people believe, well, this is as bad as it's going to get. Right. I agree. So tell us, Bill, how you believe this will play out over the next, whatever time frame you want to frame it.
Well, to be clear, there's going to be more than one reset. We've thought that the first reset would be man-made. That would fail, and there would be ultimately a reset priced in by Mother Nature. In other words, assets will find parity values versus other assets in a free, unfettered market that's not priced with derivatives. We may have more than one man-made reset. The first reset, I mean, what are they talking about now? They're talking about doing stablecoin, and that's basically it's another smoke and mirrors way to hold up the treasury market is what they're doing.
So, Bill, when they talk about stable coins, now, I don't think you and I would ever consider debt, let alone $37 trillion plus,
Right.
if you had the unfunded liabilities and mandates, 200 trillion or 250 trillion. You and I would not consider debt, enormous debt, anything close to stable, right? Yet, Bill, and tell me if my dissection's wrong on this, when you look at a stable coins, they say they're stable because they're backed by the US dollar, which is not backed by anything other than vapor and represents debt. And in fact, and if the other entity they say it's backed, which is why it's so important, so good with these stable coins, whether it's with the Genius Act or this act or whatever, is because, well, they're backed by US treasuries.
Right.
Debt. They're stable because they're backed by debt and vapor?
Well, Dave, what you just illustrated is nothing changed.
No.
It's you're replacing something that nobody wants with something that is backed by something that nobody wants. Nothing changes.
At least with the petrodollar, that was something hard involved, oil, right?
Right, and that was real. I mean, that was demand based on an asset that was actually used on a daily basis all over the world. It was. I mean, you've got to. If you look back, that was brilliant.
Which is why it lasted 50 some years.
Well, yes and no. The real reason it lasted 50 something years was the U.S. military.
Yeah.
Because think about it. You could have been Muammar Gaddafi. You could have been Saddam Hussein and talked about we don't want to use dollars. We want a gold backed or, some type of real currency. And you get your ass blown up.
Yeah.
So fear of the U.S. military has been a very, very large component of the dollar retaining its reserve currency status.
So, Bill, you got government, you got Trump, he has his kids involved in these companies that are all behind cryptos and stable coins. And you got, David Sachs in there, the AI czar pushing this, and Lutnick pushing it. By the way, Lutnick from Cantor Fitzgerald, who has a big stake in Tether, right?
The recent consolidation phase of gold should not be misinterpreted as a sign of frailty. Rather, it seems to be a natural intermission in what has the potential to become one of the most significant bull markets in decades. The metal has maintained a narrow range, indicating resilience in the face of obstacles such as elevated bond yields and a previously surging US dollar, following a significant rally that propelled prices to all-time highs. In the past, these forces would have caused gold to decline. However, it has since risen, buoyed by unprecedented central bank purchases and a world that is becoming increasingly tumultuous due to economic and geopolitical instability. This exceptional strength implies that the groundwork for the subsequent upward movement has already been established. In the future, a new wave of momentum could be initiated by the convergence of classic price factors, softer monetary conditions, waning confidence in fiat currencies, and ongoing demand from nations seeking security outside the dollar system. Gold may break decisively out of its present range in the coming months if these pressures intensify as anticipated. This could establish new benchmarks and solidify its status as the ultimate store of value in an era of changing global order. How do you foresee the price trends of gold and silver developing in the near future? Please express your opinions in the comment section below. If you find this video to be informative, please consider supporting us and activating notifications to remain informed about our most recent videos. I will see you in the subsequent video. I appreciate your attention.